We saw over the last week or so is that the volatility pushed asset prices down. Now, I went on national television. I think on Sunday, we saw the Japan stock market crash. We then started to spill over into the United States. And so when I went on Fox Business, I said, look, I think that people selling these assets are fools. What you are watching is not a structural change to the actual market. There's no reason for these prices to be going down. What you're seeing is that people are watching this carry trade being unwound because of a monetary policy in Japan.
Pomp begins by discussing the nature of volatility, emphasizing that it can work both ways, leading to higher or lower prices. He points out the irony in how investors typically celebrate volatility when it drives asset prices up, but bemoan it when it causes prices to fall. This inherent contradiction underscores a fundamental truth about markets. Volatility creates opportunities in both directions. Over the past week, the markets experienced a significant downturn, which Pomp attributes to external factors rather than a structural change in the underlying assets. Specifically, he mentions the unwinding of a carry trade influenced by Japan's monetary policy as a trigger for this volatility. Pomp argues that this sell-off presented a buying opportunity for savvy investors, as the fundamentals of the assets remained unchanged. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, well, volatility works in both directions, right? So volatility can lead to higher prices or it can lead to lower prices. One of the things that I always find funny is that everyone wants a really good positive return. And so they like volatility when it works in their direction. You know, if you're long an asset and it goes up in price, you love it. You think you're a genius. What they don't like is the volatility that goes against them. So if you're holding an asset, you're long and it goes down, then you're like, oh, I hate volatility. And so the reason why that's an important kind of data point is that volatility pushing assets up and down creates opportunity in both directions. And so what we saw over the last week or so is that the volatility pushed asset prices down. Now, I went on national television. I think on Sunday, we saw the Japan stock market crash. We then started to spill over into the United States. And so when I went on Fox Business, I said, look, I think that people selling these assets are fools. Right? And I think people kind of looked at it like that's a pretty bombastic thing to say. But my point was that what you are watching is not a structural change to the actual market. There's no reason for these prices to be going down. What you're seeing is that people are watching this carry trade being unwound because of a monetary policy in Japan. But in the United States, the stocks are the exact same. The fundamentals are the exact same. In crypto, everything is the exact same, right? It was not actually a structural or fundamental change. It was a monetary policy change in one country that was basically surgically pinpointing a carry trade that had created leverage in the system. So when you understand why that one monetary policy decision starts this unwind, what you realize is you just got a gift, right? Because asset prices are going to fall, but the market is going to bid them or arb them back to where they just were. And that's pretty much what we've seen is we saw this huge drop in prices, both stocks and crypto. And now we have basically seen a full recovery back to the levels of a couple of days before that sell-off. The reason why I think that that is so important is because it does show that the market is still kind of evaluating assets based on fundamentals, right? We're not living in a world where it is so, untethered from reality, where these asset prices just trade up or down based on the whims of kind of sentiment alone. Sure, sentiment plays into it, but at the end of the day, a stock is worth something based on some sort of fundamental analysis. Same thing with crypto, right? Is that you actually can look at these valuation metrics and kind of assign, well, it should trade in some range. And we tend to see it kind of stick in those ranges over kind of a medium to long-term period. And so maybe the last thing that I would say is, when you see kind of a long-term oriented investor watching short-term fluctuations, almost always what I find in these conversations is people see short-term volatility as opportunities to add to positions. So long-term oriented people are rarely net sellers. They usually are simply saying, I'm going to buy great assets and hold them for the long term. So the only decision that you really have, it's like if you're looking at like a virtual dashboard, you don't have a sell button. because you're long-term oriented. You only have a buy button. And so what you're really looking for is at what time should I be hitting the buy button to add to these positions? And I think that, over the last couple of weeks, what you've seen is as those prices drew down, long-term oriented investors said, hey, I'm going to hit that buy button now because I do think that the fundamentals are the same. The price just is disconnected and we'll kind of go back to where we just were. If you think about the second half of election years, historically, we have seen much higher degrees of volatility. A lot of that is because investors are trying to position themselves to be prepared for whoever's going to become the president. And so as you see in the polls right now, some days Donald Trump is leading, some days Harris is leading, some days during the same day, it switches back and forth. And so naturally, investors are trying to say, forward looking, where should I have my money so that I can benefit from whoever is going to be the president? And so when you get those moments in the second half of a year, that obviously leads to money moving around, that leads to volatility, et cetera. Now, add in the fact that you also have things like monetary policy changing pretty rapidly on a global basis. You see, in Japan, obviously, the introduction of tighter financial conditions can cause a lot of kind of stress. Here in the United States, there's constant betting and wagering on when they're going to actually start to cut rates. And so we historically see in that second half of the election year, Bank of America put out this great report that says 25% increase in volatility between July and November of an election year. And so when you saw this last spike in the VIX, it's the third highest spike since 1990, which obviously a huge, huge number. But the question is not, hey, how high was the spike? Obviously it was high. It's, will we get more of them before November? Like we still have, 100 days or so till the end of November, and we only got the volatility spike in August, but it's going to be smooth sailing from here? I don't think so. And so I think that's really what people should be paying attention to here is like, we are in the volatile zone. It just happens to be, we saw a big spike. We can't kind of let our guard down and think, it's all over now and it's going to be smooth sailing through the election.
Pomp shares his views on Bitcoin and Solana, two of his largest crypto holdings. He describes Bitcoin as a free market signal for various economic data points, likening it to an alarm system that indicates shifts in the global economic landscape. Bitcoin's price movements, according to Pomp, often precede significant geopolitical or macroeconomic events, making it a valuable asset for investors who want to stay ahead of the curve. Solana, on the other hand, represents a different kind of investment opportunity. Pomp sees Solana as a technology play, with its fast, cheap, and decentralized blockchain positioning it as a strong competitor to Ethereum. He notes that Solana has been gaining market share and outperforming Ethereum in terms of price, reflecting its growing influence in the crypto space.
AI and Bitcoin probably are the two technologies that seem to have kind of the most global impact in terms of productivity and kind of benefit to people. And so that should lead to value creation. What I do think is going to be interesting, though, is as we're kind of getting through earnings season here, do the numbers back it up? And, if you go back to the last earnings season, everyone thought NVIDIA, there's no way they could possibly keep performing. And they just blew expectations out of the water, right? And so if that continues to happen, it doesn't matter what sentiment is, right? Sentiment changes on a dime and you'll see stock prices continue to kind of roll. I personally don't yet see a reason why these stocks should be kind of turning over and going down. Sure, you can argue that maybe there are some revenue multiples that have gotten kind of high, but they are no higher, and in many cases, they are actually lower than they were in 2021. So we already saw this kind of multiple expansion in 2021 that was much more severe than what we're seeing right now, and these companies have improved. And they also have a line out the door from a customer base and future revenue on this AI promise. So if you look at these businesses, these are some of the best businesses ever created, right? If you look at the capital efficiency, if you look at the revenue and the profits of companies like Amazon or Facebook or NVIDIA, right? These businesses are literally incredible. And so if I'm an investor, where else am I going to put the money, right? And then, oh, by the way, all this is happening with 5.5% interest rates. When the Fed wakes up and says, you know what, we're going to start slashing that number and we're going to flood the market with cheap capital, where do you think that money is going to go? And so it goes back to, if you want to try to time these things in the short run, I think it's very difficult. Some people can do it. that's not my game. But over the long run, it is hard to see a world where, take the Mag 7 as an example, that those stocks are not more valuable in the future than they are today. I pretty much watch Bitcoin and Solana are the two. And obviously, those are the two largest positions that we have from a crypto portfolio standpoint. Bitcoin, I think of as one, it is the free market signal for a whole bunch of economic data points. And so, when Bitcoin makes a major move in either direction, I tend to pay attention because I look at it as a little bit of an alarm system. Why is this moving like this? Gold historically has done a little bit of this as well. If you remember when Iran launched a bunch of drones and rockets at Israel, that happened on a Saturday night. The Friday, literally the day before, gold started to run and it hit a new all-time high. And I remember writing on that Friday morning saying, why is this happening? Is some sort of geopolitical event about to occur? Somebody buying gold in anticipation of a geopolitical event? 36 hours later, you get, this massive attack. And so same thing with Bitcoin is I think that it is becoming an asset where we can tell something is happening in the world. You still have to do the work to go figure it out. But I watch the Bitcoin price for some of that alarm system or data points. Solana to me represents a much better signal on what is happening in terms of usage, developer activity of like kind of the crypto promise. So a lot of people look at Ethereum for that, right? Because it's a smart contract platform. I tend to think that Solana has a kind of a cheaper, faster blockchain. I think that there's a bunch of data points that are showing Solana is eating into Ethereum's market share. And so it kind of goes back to this idea of like things in motion stay in motion. And right now what we're watching is Solana eating into market share. I think that will continue. And naturally, you'll kind of see price, benefit from that. And so if you look over the last year or so, Solana has drastically outperformed Ethereum's price. And so if you look at Bitcoin and Solana, I think it gives you kind of these two different pictures. One is the monetary revolution that crypto represents, and kind of all the economic inputs around inflation and interest rates and, a dollar debasement, et cetera. The other being Solana is the technology revolution, right? How do you make something that's cheap, that's fast, that's a decentralized blockchain that people can build on top of and kind of serve with these smart contracts? And so that's really kind of the barbell, if you will, of what I really pay attention to on a daily basis.
Anthony Pompliano's insights offer a nuanced view of the current market environment, emphasizing the importance of understanding volatility, external factors, and long-term investment strategies. His analysis of the recent market downturn, the impact of election year volatility, and the potential of technologies like AI and Bitcoin provides valuable guidance for investors navigating these uncertain times. Pomp's advice is clear: stay focused on the fundamentals, recognize the opportunities that volatility presents, and be prepared to act when the market offers favorable conditions. As we move forward, the lessons from this video will be crucial in helping investors make informed decisions in a rapidly changing financial landscape. Please like and subscribe my channel.